What's going on, SoFi investors? Welcome back to the channel. I want to go over a couple key things with you here in this video. What to expect going into next week, the Russia-Ukraine drama that is going on, what has escalated as far as today, and I do want to go over this article. SoFi stock will recover from the tech stock correction, and they have some very interesting things to say about SoFi. Nevertheless, so we are going to dive into it. The only thing that I ask is that you hit that like button and comment down below, as well as consider subscribing to the channel. Thank you guys for doing that, and let's get into this video. So first and foremost, I do want to start off with the Russia-Ukraine stuff and go over some data around SoFi, and then we will get into this article. That will be the last thing in this video, and I do highly recommend you guys stay through this first section to get to this article because it is very encouraging. Also, what is very encouraging is that the interesting flow sentiment from the institutional investors. These are option orders from institutional investors. These are not your retail investors. These are big money positions with more data than we do have. So over the past week, we've seen 85% positive order value, 54 orders totaling $19.22 million. That is an unprecedented, high bullish order value. You are not seeing these kind of numbers on any other stock at the current moment. You're seeing quite the opposite. You're seeing a 20 or 30% bullish or positive order value. So as far as Friday, you've seen 11 orders totaling $1.2 million, positive order value of 87%. And you can look at anything else and you're not seeing these kind of numbers. So that right there is looking good. As far as the short interest, because this is not a short squeeze trade, you're not buying some junk stock hoping for a short squeeze, but it can definitely happen, and I want to keep you guys up to date with that because I know a lot of people that cover SoFi don't even talk about the short interest. And if you can make short-term gains, short-term rallies, you can spot these opportunities, why not? And also be a long shareholder at the same time. That's personally what I do. Feel free to, do that if you guys want to. Not a financial recommendation. Current short interest of free float is 18.86%. Current shares that are sold short of 116.59 million. Cost to borrow max of 2.32%. And the share utilization is 96.24%. Days to cover at 2.83. So it's definitely looking prime for a short squeeze if we do see a bullish earnings. And that's something that I also do want to point out right here is this comment 23 hours ago from I am Jack Jesse. It says, "Hi Michael, thanks for the video. Big thumbs up for the video. After today, we have 6 trading days until earnings. I have done an exhausting amount of research and DD on SoFi and feel like SoFi is going to have a great earnings call with great guidance. At what price would you personally consider adding to your position? Are you waiting until after earnings?" That is a very great comment. Thank you for that comment. I do think SoFi will have good earnings, and I do think they will have good guidance. I do think the fact the Super Bowl was played at SoFi Stadium is definitely helping some things out, as we see from the Google Trends, which usually has a direct correlation to how a business is doing. It's through the roof. It's at 100. And before, before everything, like before SoFi was known to be playing the Super Bowl at their stadium, the search trends were like 15, 14, 20, very low numbers, and they started to ramp up to a high of 40, came down to 31, and now are at 100. So they got a lot of advertisement. I'm not going to call it free advertisement because leasing the stadium was like 30 million for 20 years, 30 million per year, I should say. So it's not really free advertisement, but I do think they gained a lot of customers by that. And now SoFi is a name. When you hear SoFi, you're going to remember it from somewhere. And I think that is very valuable and lasting in people's minds. So I do think you will see good guidance. A lot of that due to the Super Bowl and due to the attention that SoFi did receive, and presumably the customers that SoFi acquired because of that. So yes, I do think you're going to see good guidance. I do think, SoFi is probably going to go up on their, earnings day, but stocks like SoFi, think of Square, PayPal, or Block, whatever you want to call them, those stocks as well, those are getting beaten down. Square also has earnings coming up here in the next couple of weeks, so that will be interesting, and maybe that will set a new tone. If SoFi has good earnings and Square have good earnings, maybe they will recover a little bit. But the fintechs, the innovation stocks, are getting destroyed, and that's maybe an understatement. They are getting beaten into oblivion. And if that does change with SoFi, I think that'll be very positive, as we do see stocks with good earnings are tending to hold up a lot better than stocks with bad earnings. Stocks with bad earnings, that's like a green light to short the hell out of the stock and short it into the ground. So it's going to be very interesting. As far as when I would add to my position, I've been adding to my position. I just added 50 shares on Friday, so now I own 450 shares, average at about 1550 on my position. So I definitely want to get that down a little bit more heading into earnings, but I do want to keep some money in case SoFi does drop to, I don't even want to say it, but if it drops to like $8 or $9, I definitely want to take that opportunity to go shopping. So that's my thought. Hopefully that did answer that question good enough. But let's dive into the Russia-Ukraine situation and what to expect next week. So the German chancellor rejects calls to sanction Russia now, argues the West should keep Putin guessing. And that was actually said just a little bit ago today. And I think that's not really new information. The media portrays it like it's new information, but it's really not. We've heard this, Biden, everybody has said they're not going to sanction Russia until they actually do invade, because it's supposed to be a deterrent, not something that causes a Russian invasion. Now, as far as something else you guys need to know, it is that Russia could invade Ukraine without any warning at all as Putin tests missile launches. That is what is really new here, that Putin tests these missile launches. And it says that Stoltenberg's comments came as Russian military launched ballistic and cruise missiles on Saturday in a show of its nuclear readiness. And, it sounds like tensions are definitely getting worse, but the verbiage here is things we have heard for a while now. NATO's chief says Russia could invade Ukraine without any warning at all as Putin tests missile launches. We've heard that, without any warning at all. And there's this weird dilemma that happens in the markets that, peak fear is always, heading into a war catalyst, and then shortly after that starts, and then after about a week or two in, the markets start to relax that the worst is over and start to take a breather and start to rally again. But we do have the Fed that is weighing on everything, and here's this. Actually, is it this one? Yeah, it says Russia's Ukraine threat and worries on Fed rate hikes could make for a turbulent week in markets. The only thing the markets are really going to care about in the short to midterm being like the next year and a half, is going to be what the Fed does. Is the Fed behind the curve? Is inflation going to come down? Or is the Fed going to have to raise interest rates to 7, 8, 9, 10% to beat down inflation and put the economy into a deep recession? That's why the Fed is the only thing that matters. This Russia-Ukraine situation is really a sideshow, and I don't think anything is really going to come out of it. I don't personally think Russia is going to invade Ukraine. I could be wrong, though. But it says the key points: tensions between Russia and Ukraine dominate market focus in the week ahead. Analysts are watching key technical levels for stocks during these volatile times. I think SoFi's technical level is going to be about $10 per share. That's where we've seen some support last time around. But it all depends on external factors here. But that's the great thing. Like Jeff Bezos said in the early 2000s, the tech bubble, he said Amazon stock price was going down. It went down 95%. I believe it was $140 down to $6, down about 95%, whereas the business was only getting better. So that's where you really make a lot of money in the markets, and you find those opportunities. And I think SoFi is a prime example of that. The business is getting better, whereas the stock is getting a whole lot worse and going straight down. Now, this does say it's a busy week for economic reports, and Friday's personal consumption expenditures inflation data, which is watched by the Federal Reserve, is among the most important, and that's going to be a key one on Friday. You also have some other ones, coming up, which I will give you guys that full scoop in tomorrow's video. It says this is the final rush of earnings season, with Home Depot, Macy's, and other retailers reporting, as well as a group of energy companies such as Occidental, I can never say that word, Petroleum, and Coterra energy. You also have, your small and mid caps that are starting to report here very shortly, including Sofi, which is going to be, I believe, on March 1st. Am I correct on that? Let's see. I have a lot of earnings days I got to keep in my head because I have a lot of investments elsewhere as well. And yeah, you can see March 1st in after hours. So yeah, not too much time left to get things rolling. Just to reiterate, my position is 425 shares, portfolio diversity of 12.58%, average cost of $15.74, market value of $4,700, down almost $2,000, or down about 28.79%. So that's really what you guys need to know as far as all of that is concerned. Let's dive into this article. It says SoFi stock will recover from the tech stock correction. Investors will gain the courage to buy back stocks of quality companies. Investors on Wall Street have very little confidence this month. The problems come from the slew of concerning serious headlines, so it's not surprising to see younger stocks like SoFi fall insensibly. SoFi stock is almost 60% below its all-time high. If there is any good news, is that it's almost about 16% above its recent lows. In the long run, this one has the opportunity to blossom into a leading financial technology fintech company. The hardship it is enduring now is not entirely its own fault. Even great stocks like Roku and Meta are falling on strong financial reports. The markets are selling first and asking questions later. And then it does say SoFi stock has to simply wait out this onslaught on the up and comers. It says management is carving its niche inside the consumer side of fintech. The sector is in a crucial transformative phase, setting the future landscape. Believe it or not, crypto also plays a big role in that, as the world will adapt innovation from it. The pandemic has catapulted the movement forward leaps and bounds. Meanwhile, the problem for SoFi stock is not that it doesn't have enough history to get the benefit of the doubt, and even then, just consider what's going on with PayPal stock. The company is on rails and has never done better, yet the stock is collapsing like it is on a path to ruins, and that's just crazy. PayPal $305 at its 52-week high. Now it's at 105. Ridiculous. So the fact that SoFi is even doing this well, which is tough to say, I think is really good. Now, it says some of the bearishness in the market is beyond reason. It's hard to justify these actions, yet the adage says to not fight the tape. Those who are already long SoFi have reason to stay in it. Others looking to invest in a good company with potential can start nibbling. Since the CBOE volatility index is above 27, investors must remain humble with their conviction levels. This should dissuade them from taking full risk at once. Instead, it makes sense to set it up in stages. The goal should be to average into a full position and not needing the average down. Now, it does say the fundamental metrics on SoFi stock are murky. Therefore, I will merely rely on logic and business opportunity than a price to sales metric. Even then, the SoFi price to sales is 18. That does not suggest bloat yet, especially for a young company whose current priority is growth. The company's website lists opportunities in 10 different segments. That should translate into more financial success later. For now, the problem is a silly behavior from the market. The rally out of the pandemic was strong, and it is in reversing now. This sort of reversal often overshoots the current price. That means that excellent companies like Block, Square, and PayPal might seem toxic for no reason. And then they say there's nothing wrong with the business. From a fundamental perspective, none of these companies I just mentioned have business problems. They are all at record sales and growth rates. I find it mind-boggling that the high-profile expert investors are not pounding the tables yet. Nevertheless, for now, the bulls are hiding, so we should let the chips fall before we catch them. Investors should monitor the $14 per share zone. This area has played a very pivotal role on 4 different occasions. Therefore, from a trading perspective, this stock is between a rock and a hard place. SoFi has support below and a lot of resistance above. The rally back will face sellers, so there isn't a panic to buy into it yet. Adding a little bit now and some more later makes the most sense. Very, very bullish article on SoFi, and that's not, again, another level that I've been pointing out is that $14 price. If you had bought at the $14 price right here, or right here, you would have made money 3 times. And then if you bought at 14 right here, you would be down some, but all in all, you would have done very well. So once we break back above 14, we should have room to continue back to probably about 20, or if this chart, says anything, maybe about $25. But it could be a while before we get that kind of valuation back for a lot of the growing companies. You can also see the volume is very, very good. The volume is actually better than it has ever been on SoFi stock. More volume now than we've ever seen, and that's definitely a bullish thing in my personal opinion. Mix that with the institutional investors that are placing very bullish bets, and the shorts that are eventually going to get squeezed out of their positions, and the presumably strong earnings we are going to see. And once market tensions start to relax and the markets realize, hey, the Fed might not have to be as hawkish as you think, that's when SoFi will recover. So there's not a desperate need to go YOLO everything to buy as many shares as possible. Now, if SoFi gets down to that $8 mark, that's when you go balls to the walls and you do whatever you got to do to buy as many shares of SoFi. Or personally, that's what I will do. Not financial advice, but we are not at that moment yet, but we are certainly approaching that stage. So thank you guys for watching. That is what you guys need to know. Hopefully you guys got a crash course on what is going on in the geopolitical landscape as well as SoFi. Like I said, thank you guys for watching. Subscribe to the channel if you have not already. Like the video. Make sure to comment down below your thoughts on this video. Thank you for watching, and I will see you in the next one.